Stock Market Morning Prep video for Thursday, August 14th. Green again, Dow Jones up 91, NASDAQ up 44, S&P up almost 13 points, and a Russell up almost 9, $8.75. So we're getting a continued bounce into the sweet spot, and we're going to see if this sweet spot's going to hold and the markets are going to retrace. Now, we do have monthly options expiration this week, which expires tomorrow, and usually we have a bullish bias to the upside, so I don't actually, this is not anything new when the markets are very dull, quiet, especially at the end of the summer. And on top of that, you throw in an options expiration monthly anyway. You usually get an upward bullish bias. So pretty standard stuff. It's kind of quiet. There's a lot of stuff going on that it looks like it's going on anyway. And markets are really not doing too much. So you got to be very, very selective in your trading and in your stock picks. So what I'm going to do is most of the indices, actually, let me backtrack. Most of the indicators that I showed you really have recovered ever so slightly, so I'm not going to get into that today. I just want to show you the indices that we follow and see where we may be headed from here. And remember, guys, we have a lot of uncertainty out there, so at any given moment, somebody can throw a monkey wrench into this market and really start moving to the downside. I do see some downside risk before we continue to challenge the highs. But that could change, and we are going to follow what the market gives us and do our analysis and our trading off of that. So let's go right to it. Right now, again, very, very funny that the bonds they continue to move higher, and equities really have totally ignored this move. And I've mentioned many times that bonds are in a short squeeze, and sure enough, as you can see, we continue to challenge the target highs that I'm looking for at the 140.22. We got really close there, 11 points, 11 ticks rather, and now we're just looking to kind of grind higher. I wouldn't be chasing bonds. Bonds need to really come in a good move lower, something like this for 2 days, and then, as you can see, something retracing. So that's something that I'm looking for. If not, look for a target of the 140.22. We have the ES. Now, interesting on the hourly, I'm going to show you, I found a nice little bullish setup on the ES, and we'll see if that pans out. We're getting into that sweet spot, that 146, 148 area. You know, even if it's an overshoot of 150, I'll show that to you on the daily, but we can see here we're starting to trend up higher again. And you know, again, buyers of dips are in full force again. I mean, that's just no way about it. And other than a small correction that I'd be looking for, I would think that, again, you need to buy the dip as well as anybody else until this market really starts to sell off hard with a lot of fear and a lot of volume. Now, obviously, we took out pretty much 2 months of gains in about 5 trading days, and now we're back up and we recovered half of those gains in about 5-6 trading days. So the markets are all over the place, and on top of the doldrums of the summer with nobody around and light volume, the moves, whether it be up and or down, are exaggerated, and that's what we're dealt with right now. So let's just keep that in mind. So let me show you the hourly chart. So what we have here in highlighted is an inverted head and shoulders, which is a bullish pattern. Here's the neckline, which needs to be taken out, and we're into this sweet spot right now. So we do have the left shoulder, the head, and the right shoulder. So this is a bullish pattern, and if you wanted to really play this out, this is about 50 S&P points, so this would be a target of close to 1995, which would come right about here, which would be almost the highs here. I actually would take out the highs, so that's the target. I'll put a target in for tomorrow's session, but if you take the high to the low, you measure that and you add it to the neckline, you're coming around to 1995-ish. So we are in this cluster area, which we're starting to break out of the cluster. Would it surprise me? Absolutely. Nothing surprises me in this marketplace. Nothing surprises me. The markets are heavily manipulated. You look at it into the grain markets and the crude oil, and you can see 3 major conflicts going on, and crude oil, nobody cares. And they say that, we have an overglut of supply. And that all of a sudden just changed 5 weeks ago. So I'm yet to be seen, but nonetheless, you have to pay attention to what we're given, unfortunately, and either change or adapt ever so slightly to your trading plan when you're being dealt this type of market. So there's still a lot of good trading out there, just that you have to be selective, and it is going to be a little boring. And I can't wait personally till September rolls around and everybody, after Labor Day, we get started and everybody's back to work again to get some volatility and at least some decent volume. I mean, this has really been pretty ridiculous to pretty much most of the summer. But it's to be expected. Anyway, so here's a bullish pattern. Let's see if this plays out. And if it does play out, it's going to help all the other indices. So here we are, 38% from the high to low here. You can see that I left the downside targets if we were to break down below. So basically, the diamond's met its downside target of its 200-day moving average. So we're at the 38 here. Let's see if we get to that 50% retracement, and then we'll see what happens. Again, bearish rising wedge, which broke down, and now it's back testing in these moving average area of resistance. So we'll see. IWM, pretty sloppy chart here. You can see it tested a 38% retracement, so it's looking to see if we can break out a little higher. 61.8 is really the sweet spot, but I do have some upside targets here on these extensions if this were to play out, and now we're reverting back to the upside. Now, downside symmetry, bearish symmetry is still intact, but if we take out that 38% and really start closing above the 50, then I think all bets are off to the downside with the Russell, and then we start headed higher again. But remember, Russell was one of the leaders, so it'll play a big role for the other indices. It'll definitely dictate. Transport's our leader now retraced back 50% of its move, so it's sitting right here. Now this is also, even if it went back to 61.8% retracement, which is the middle trend line area of resistance now, let's see if that breaks down. But again, the first target is met from where we started. We mentioned right around here that our first target would be here, and then of course the lower trend line, and then ultimately that 200-day moving average, which I do think we get to. I just want to see where this retracement takes us. If we start breaking to the upside, then I would say all bets are off to the downside, and then we'll start chopping around and probably work our way in and out of this channel until the end of the year. But the problem is, if we don't get a big correction, then we have to really re-alter our analysis for the fall and, of course, the winter months going into the end of the year. I would love to see a downside correction of 8 or 10%, and that would really give us good energy to really run higher into the end of the year. So we'll just see. We'll see what happens. And then lastly is the Qs, as you can see. And I mentioned the Qs have been the strongest indice of the 5 that we follow, and it is one of our leaders. So it's definitely taking a leadership role here. So keep an eye on tech. Tech has been doing pretty well here, and I don't see any change, again, unless something happens in Ukraine, Russia and Ukraine, or any other two conflicts that are going on out there. All right, guys, have a great day, and we'll see you tomorrow. And definitely use your stops out there. Remember, it's definitely a stock picker's market, but if you can identify good trade setups, there's definitely some money to be made out there. Have a great day. We'll see you tomorrow.